All right, good afternoon, everyone. This is Jared with selfliquid.com. I've got about 30 minutes left in the cash session. So basically wrapping up a rather, slow grind higher, but, in comparison to what we've seen in prior weeks, sort of a dull week. And you can kind of see that just in the overall volume. Um, I've talked about this a lot this week where the volume in the market has basically, you know, dried up a bit this week, along with volatility. And my computer's freaking out here. There we go. So you can see here in the Spiders ETF or the S&P ETF that really since Christmas or the 26th, volume has really just kind of fallen off. And next week, we've got really the first big earnings event or announcement coming up with Netflix, and I think that'll really dictate how the rest of the month, or at least the direction of the rest of the month. If Netflix, and I'll get into this in just a minute, but if Netflix, has a move higher, I think that could send, at least in the short term, the rest of the market higher. And if it really gets banged up, I think it could also drag kind of everything down with it. Now, of the FANG stocks, Netflix isn't the biggest. Apple and Amazon are. Um, and Facebook is even bigger than that. Google's bigger than that. So, I mean, it's the smallest of the, I believe I'm correct. I don't have it pulled up. Let me just look just to make sure. Yeah, so it's actually by a decent margin. It's the smallest. So 147 billion, Facebook 412 billion, Apple 719, Google 739, Amazon 803. So I didn't realize Apple had fallen, that far. But anyway, they've all had a pretty good rally off the lows here. And today, like I said, was just really a kind of a bit of a boring day. Now, I got short Amazon yesterday, or excuse me, the day before yesterday, and added some yesterday. And then today, I've put on some call spreads in Netflix. So in Netflix, I sold 340, 345 call spread that expires in 14 days. And I also sold the 350, 355 call spread that expires March 15th, so 63 days. So, with this massive move up in Netflix, I mean, I'm basically just playing off of that, where I just, I don't think that we're going to see much uh, higher prices in Netflix. So, with that longer dated one, I do have a little bit of play in there where if we do get a move into the 618 level, basically 350, I have plenty of time for this to come back down to earth. And even, even somewhat of a pullback, uh, I think could be substantial in terms of a percent move just because of how big of a move we've seen off the lows here without any kind of a pullback or breather, so to speak. So, if we look at, the FANG index here, let me pull that up. Give me just a second. Okay, so basically, should be pulling up. There we go. So I showed this yesterday, I believe, and if we look at it from a weekly time frame, you'll kind of see what I'm looking at here. So basically, what I'm looking at is, it's not the cleanest looking head and shoulders pattern, but you can see that price has, and you can make the argument that actually this is a daily. There we go. I mean, it looks a little cleaner from here. But we're basically at the same point that we were with this left shoulder, this being the head, left shoulder, right shoulder. And I'm just looking for a bigger, move lower in tech as a whole. Tech is what really has drove, the U.S. economy over you could even say probably the last uh, 20, 25 years, but definitely the last decade. And it's just really, it's time for some of that stuff to, I think, kind of unwind. Amazon and Apple both hit $1 trillion. And one of the big things that I've kind of read about this, and you're starting to see it with Facebook and Congress, Google having to go before Congress. Tech is one of the most unregulated industries there is, and that's starting to sort of change. And with regulation, typically, you can see, that's always the big worry with regulation is stifling innovation. And so um, with all these regulations, you're starting to see, I guess maybe some of that worry play out here. And I mean, the whole market has shedded, at least 15-20% over the last, the tech market that is, over the last month or two. Um, and I just, like I said, I'm looking for something a little bit longer term now. Once again, if Netflix kind of surprises everything and has an up move, I think that could bring a lot of the market with it. Now, with that said, let's look at the indexes again. So this is the S&P cash and a daily chart here. So you can see that we've had a really nice move from the 26th low here and have found ourselves right at this white line, which is the 34 exponential moving average. And the way I look at this is sort of as the mean. Now, if any of you have read the Turtles book or The Way of the Turtle, this is sort of based off of that idea. So, basically I believe they use like a 20 period moving average with 1 and 2 standard deviations. So this is a 34 period moving average with, 1 and 2 standard deviations. So the way I kind of look at this is, anything below the 34 is bearish, anything above is bullish. And this is sort of the area where you can see price has respected that area pretty well. And the way I look at or do analysis is I'm looking for a confluence of different levels. So imagine trading as, to an extent, you're always sort of flying blind because all indicators are basically um, showing you kind of past information, and you're trying to predict what's going to happen in sort of an unpredictable environment to an extent. So you're just trying to give yourself an edge here. And when you have signals all sort of starting to tell you one thing or another, that's the highest probability way to make decisions. And so basically I use Fibonacci, and like I said, this 34 moving average. And when I get, levels lining with this, that's how I try to make decisions. So with that said, you can see from the high to the low here on the SPX, we've crossed this first kind of big level from this high to low swing, this 382, and find ourselves right at the 34 EMA. So 25.89, we're at 25.94. From just this perspective, this is all bullish, or at least for continuation into something like 26.17. Excuse me. So, from just that perspective, it looks like maybe going into next week, we could see some continued, kind of bullish movement. Now, the NASDAQ, which, I think has really driven most of the market just primarily because of tech. If you look at this, you'll see that price has crossed the 34 as well and is now chewing around this 382. So basically right aligned with the S&P. Um, so let's go and look at the Russell. And I don't spend a ton of time looking at the Russell, but you can see it also has crossed the 34. So all the indexes are kind of at that point, for at least the way I look at things, as kind of crossed into bullish territory. Now you can see though in the past when we crossed this, it was not too long before basically the selling resumes. So that's just something to be wary of here. Is that since this happened in a similar fashion last time, and even looking at it from a 195-minute chart, you can see that we are a bit extended now to the upside without any kind of a pullback. So going into next week, what I've kind of positioned for is I've sold call spreads, like I said, in Netflix that expire in 14 days. And then I have call spreads in Amazon that expire in 7 and 14 days. And I'm still in Newmont Mining, so that's NEM, and that has 28 days, and I have calls in that. So I am looking for sort of a pullback in tech and continuation of strong metals. Now, because I've sold spreads, I've sort of left it open to where if this rally does continue, let's look back at the Nasdaq here. So let's say that we do get a rally in tech going into next week. What I can do with those call spreads is I can buy the short side or the side that I sold, and hold on to the long calls. And there's a lot of upside potential here if this does continue higher. So that's sort of the nice thing is we're at really a point where I don't think I have a drawing tool in here. Um, well, so basically, if from where we are here, we're at the mean, as I kind of mentioned from the way I look at it. So it's either going to be a break lower from where we're at 6,600, or it's going to be a break into about 6,800. So let me just run something here to kind of give us an idea of where we could be headed. Um, Let me clean. There we go. So from the low here to the most recent high a couple days ago, that would be 63.50 roughly. And then let's run this. So it'll give us a symmetrical move from this high to low to high. So, longer term, if this is basically just a bounce within, a bigger down move, that aligns pretty nicely with, and I don't pay much mind to trend lines anymore. I think it's very subjective looking at those. Um, but as you can see here, there are some levels that kind of align pretty nicely with that 100% swing. So, it's just something to pay attention to. I think next week is going to be very big with Netflix earnings. And let me just take a look. I don't actually know. Like Facebook, I think would report next, and they're not in necessarily any kind of order by market cap. But I think that they're one of the earlier ones as well. So on the 30th. So you can always kind of see that priced into the option chain when the IV on that particular week gets, exceptionally high. So, and oddly enough, the IV on Facebook, that may be, there may be something there just because with, a run into earnings, you typically see a rise in IV. So if you look at Netflix, um, Netflix options right now are at like 89% IV next week. Right now, they're currently at, and I mean, it's low right now because it's the end of the week, but 21, where the following week, oops, give me that 12 now. The following week, they're at 69, so 84 to 69. So you can see, after earnings, that volatility basically just disappears. So with that said, it may be a little early because you may see, um, some higher, but I'm going to go ahead and sell just one more spread here in Netflix. I'm definitely heavy on kind of my Netflix short, but with this move here, I mean, to me, let me just show you again here on the daily. Let me get all this small, tiny levels off here. So we've crossed to 50% from this high to low. And once again, I mean, it's hypocritical to say, but you can just see how this aligns pretty nicely from this. There's a pretty obvious downtrend here that we're just now kind of getting into. Oops. Oops, come on. There we go. So, I think this is just a pretty big ass move without any kind of a pullback. And, um, to me, you have to look at kind of this as a path of least resistance. And we've had now what I would consider sort of above average move. Um, without any kind of breather. And so if we run just, as if this is the high today, so from the low to high, that gives us a pretty good area to where we've seen. with the 34 EMA, the first standard deviation level, so around 306 or 307, and then right around 300, that's a pretty healthy pullback. Um, where we've had this massive move up from the low was 231 and we're at 338 today. So I mean a monstrous move in Netflix. So that's why I'm selling options here. And once again, the beauty in selling call spreads is that, and it's not always a perfect scenario. I mean, if it really moves against you hard, um, it's there's not much you can do. But if you realize you've picked the wrong direction, the beauty in doing something like I said, selling call spreads, is you can buy back the one that you sold and keep the one that you bought as protection and let that run. So it doesn't always work, but it is sort of a nice way to defend. When you've kind of bought in the wrong direction, or excuse me, I guess sold in this case in the wrong direction. So about 13 minutes left in the session here. Let's take a look at a few other things. Let's look at the bank. So let's look at XLF. So from just this perspective, I mean, XLF looks, from just a 39 and 78 minute, you've got, um, momentum short, showing here, bullish activity, but it's just still below the 34. And you can see it's really, had trouble kind of getting above this area. So I'm not super. It's hard for me to want to get bullish here. I've kind of explained, I think, my bias in uh, about as good as I can. So let's, Goldman Sachs is at sort of a point too where, let me just see here. So yeah, you can see, I mean, from this low to high to low here, that's 100%, and it's below, uh, the 34 EMA. Now there is a saying that, it's always, and there's plenty of sayings for either direction, but, don't short a quiet market. And I did note, we have seen a lot, uh, less volume than we've seen in just the past couple of weeks. So let's look at Bank of America. Bank of America, on the daily chart has crossed the 34, and there's a lot of space to run. Yeah, let's look at, this is the bank that, I think could be the next sort of layman, Deutsche Bank. So with, the troubles in Europe, this bank has been the one taking the biggest beating. So really nothing too conclusive there. I mean, I think the whole market is at a pretty big, a decision point, if you will. So we're like I said, we're at, from what I consider, the mean, and it's, are we about to break higher or lower? And right now I'm positioned pretty short. So what I may do going into next week is, buy calls that expire, 2 weeks out or something. Now the IV, kind of take a look here and just see. Let's see what calls on the Qs look like. Yeah, IV's not crazy. So um, I'm not necessarily going to do that. I mean, you can see here just from a shorter time frame, it looks like, there is a squeeze coiling, but the NASDAQ futures actually. I've always seen, the NASDAQ futures sometimes I feel like is a better, uh, kind of gauge of where things are going. I'll see signals start to develop here first. So, looking at this, I mean, obviously it's very similar to NDX, but, we are right below 66.35. So we've slammed into that 618 already from this perspective. And I mean, let's look at this actually. So 6409, 6402. Okay, so from this high to this low to this high. So 6372. Seems like a very, viable pullback within this area. Um, so let's look at, oops. All right, so from the low to high here. Yeah, so I mean, this is definitely a zone where I think we could get a pullback into. So 6,400 to 63.15 basically. I mean, I think that's a pretty good area for a pullback. It would keep it within this uptrend. And then once again, we get our, we find ourselves is this where bulls take back over and, this rally resumes? Or, is this in fact just a bounce within a bigger downturn move? Um, I've listened to a lot of other people, and a lot of the things I've heard people discuss is, this is the beginning of a bear market, and bear markets can last anywhere from, 15 to 18 months on average. And if that's what this is, I think you have a lot of people saying things like, and earnings were really good. You had a lot of companies with record earnings, but I think a lot of that stuff is I think it's sort of misleading because of debt balance sheets with a lot of these big companies, is where they're using debt to finance um, really essentially just nothing. I mean, you're seeing a lot of stock buybacks, and they're using this debt to buy back stock instead of actually, doing things to innovate and put in, and using this sort of as a blanket statement, not necessarily, all companies are doing this, but I believe 2018 was a record buyback year. So with cheap debt and, knowing that debt is going to get more expensive, it's just something to keep in mind where, if you're buying stock back at record highs, uh, I don't know. There's there's just a lot of things where just because they had record earnings, I don't think that's necessarily something that's just going to continue forever. And with interest rates hiking, I really do believe, that we are sort of witnessing, the very beginning of what could be at least an 18-month down move. Um, and I'll be definitely happy if I'm wrong, but, I'm pulling up a monthly chart as we speak, and you'll see that, I've got so many freaking levels on here just because I'm not typically looking at a monthly chart. But we could go as low as, something like 5,000 in the NASDAQ and technically still be in, a somewhat of an uptrend. That's a massive move down. I mean, that's 1,600 points from where we are now. So I just think that's really important to keep in mind, because look at the move in contrast. So this was the 99 2000 crash. This was the 2008. So this was nothing in comparison. So just running some levels off of that. So from this high to this low, this I mean, that puts it down somewhere. And look, I'm just running the levels. I'm not saying this is where we're going, but sub 4,000, so somewhere around 3,600. So that's cutting it in half basically from where we are now. So anyway, I mean, I just think, one, I like talking about this stuff, and two, I think we are at an interesting point in time in the world. In the U.S., the U.S. has had a phenomenal run. I was just listening to something this morning where most markets really have not been anywhere near as strong as the U.S. is, and I made this point earlier where tech has been, really what has drove, the U.S. economy higher. And once again, with regulation and things like that tightening in the U.S., it's going to put a strain on, tech. And so, pulling up this FANG index here, I just want to pull up, a monthly chart of it as well. So, just to get back to the mean, and these prices are somewhat irrelevant, but it just gives you sort of reference points in terms of like if this is moving, higher or lower, as will or as should, most of the FANG markets. So can really be just a leading indicator, if you will. So really, just to get back to the 34 here, that would be on this index. Um, 30 points roughly. 20, well, so sorry, 88. So 20 points, basically from where we are now. So I don't think that we've seen the end of the selling just yet. And really going into the last few minutes, I'm set up for really a continuation of that. Now, actually, just looking, it looks like NIM is getting a bit of a bid into the close. So it's up just a little bit, but this is a sort of a play on the metals market, and this is one that I'm planning on, really just on the rest of the market action and how this thing, and how long it takes. There's just kind of a lot of factors, but this is sort of the area around 35, um, 35.50 to 36 is sort of where I'm, looking possibly to take this thing off. So down to the last 2 minutes or so. Um, let's look at just a few other things. Let's look at the VIX here. So the VIX is continuing to kind of fall here. But really like I said, once again, with Netflix earnings next week, I think we should see this turn back up. So, I mean, it looks like it could come as far down as, 16, but let's look at oil. So, I mean, the metals, definitely still like they've got room to run from this weekly perspective here. Weekly squeeze firing on silver. Now there is some contradictory signals here. So on this 195, you do have a squeeze starting to fire short. Um, so there could be a bigger, pullback in store for at least silver here. Now I don't know how much that will affect NIM. NIM looks to still really be going strong here, but I'm pretty close to my targets on this one. So, with any kind of down move it in equities next week, this should see a nice kind of pop. So about 30 seconds left in the session. Um, so wrapping up a pretty, kind of boring, I would say by recent standards, kind of week, but I'm positioned for um, you know, tech to start kind of taking a beating here. And anyway, that's about all I've got for today. So I appreciate you tuning in, and join me again next week to trade the last 30, 45 minutes of the close. All right, take care.